from a bank's perspective, there's multiple angles to look at this from. First and foremost, what does this really mean in terms of impact to the bank? Especially, what if we do nothing? Like, what if the bank does not evolve or iterate here? That's the first question. You think about many financial institutions today serving cross-border payments using traditional methods. There's non-interest income that's coming from that. Those relationships are business customers. Many of them are holding account balances at the bank as well, so they're holding deposits. So there's a deposit opportunity there as well that could be potentially threatened.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hello, everyone, and welcome back to Wrestling Payments FinTech Shark Week, the special series where we dive into the biggest battles, boldest moves, and breakthrough moments in payments and innovation. On this episode, we're zeroing in on the mid-market, those financial institutions that are too big to be small and too small to be big, but absolutely critical to the future of banking. And we're breaking down what it takes to be competitive, to scale, and to partner like a heavyweight. So for mid-market financial institutions, the stakes have really never been higher or the opportunities greater. And these folks are in a unique position. You're not held back by the massive, slow-moving infrastructures of some of these larger banks, but you're also not a fintech, starting up with nothing to lose, right? So you've built trust, you've established customer relationships and real staying power. And as fintechs push innovation forward and mega banks really double down on fintech partnerships, acquisitions, the question is, where does that leave you? Take Stripe's latest move into stablecoin accounts as an example. So this isn't just innovation for innovation's sake. It feels like it's a direct play to kind of replace the payment services and treasury management solutions that have historically lived within the walls of banks and credit unions. And while big players are kind of already adapting, a lot of mid-market institutions are standing on the sidelines, kind of waiting, watching, and hesitating. So today, that's what we're talking about, why the hesitation is a real threat and why operating internally and across the industry won't just cut it anymore, right? How mid-market institutions are perfectly positioned to lead if they're willing to step up, kind of break down those walls and just start building strategic partnerships that create real value. So joining me today, really excited to talk with Randy San Nicolas from Braid and Daryn Barney from Role FinTech. These two aren't just building tech, they're on a mission to make sure that community banks and credit unions are left on the sidelines while mega banks run the field. They're helping financial institutions play in the same sandbox, we'll say, with the same tools and at the same speed as these giants. And they're doing it in a way that puts relationships, creativity, and community impact in the front and center. So Randy, Daryn, feel free to introduce yourselves. Whoever wants to go first, tell them a little bit, the listeners today, a little bit about what you guys are doing at Braid and Role FinTech, and you guys can take it away.
Hi, my name is Randy San Nicolas. I'm the co-founder and CEO of Braid. I've personally been in this space for coming up on 25 years. My first project was in a little town called Snook, Texas, a small bank set out to build a fintech sort of infrastructure play, and I was part of that. And over the years, I've just sort of observed that, small institutions have a lot of the same characteristics as startups do, right? In terms of nimbleness, the ability to make decisions quickly. And so when I started Braid, it was simply to not redefine or create innovation around technology, but essentially returning power to smaller institutions where it belongs. And I think that, as you mentioned, we're on a mission. This is not a technology play, because if you Googled what we have, there are thousands of providers out there, but I think what makes us, special from a conviction standpoint is that we do believe that community financial institutions are the bedrock of our economy, and we need to empower, we need to fight for them to be able to prosper and grow and so on and so forth. So nice to meet you all.
Thank you, Randy and Elyssa, for this opportunity. Great to be here today. Daryn Barney, founder of Role FinTech Partners, 25 years in payments and banking. Got my start in the industry early days in an e-commerce gateway company. We grew the business. We saw a lot of success there. After that time, had an opportunity to break away and found additional payment companies. And we've continued to see this continued iteration in payments and banking and how they intersect. The lines have just continued to become more and more blurred. So excited to have the conversation today. I think today we're seeing this continuation happening within fintech and banking. Lines continue to become blurred, which is creating both threat and opportunity for banks, and looking forward to the conversation today.
So now we're going to talk a little bit about the reality of the silos in this mid-market space. Mid-sized institutions could have the agility to kind of pivot, but I feel like they think that they need this like mindset of kind of stay in your lane. Internally you got product, risk, innovation teams, and they're not always aligned on how to kind of pursue these opportunities. And then externally, there's hesitation to fully explore fintech partnerships, kind of waiting for the safest path, right, to emerge. So my question for you guys is, what's your take on how silos uniquely affect mid-market institutions compared to, mega banks, big banks, and fintechs?
Yeah, in terms of silos, I kind of think of them in categories. So one, it's around projects and data, right? How are these large enterprises? I mean, the advantage that the large enterprise financial institutions have is that they have the budget, they have dedicated teams to what a lot of times are referred to as missions, right? So you've got a mission, they're working this project, they have the financial resources to do these special projects to bring it forward. So those become somewhat of a project, but they have the resources where, that particular silo is, they've got, particular project or mission that's assigned, almost like a business model they're building out with their own requirements to deliver on that. So we see, that happening with the large financial institutions. With the smaller financial institutions, there's a bit more of a challenge there because they don't have the same dedicated team on these resources. They're not necessarily siloed out in a way where they're building out specific project implementations on that. So this is an area where we see the larger financial institutions have a bigger advantage in this because of their resources they have. But at the same time, for the smaller financial institutions to build a well-defined fintech management policy, defined process and procedure around that itself creates its own business model where collectively those silos can be overcome. So a lot of it really gets down to the communication, sharing of data, the project plan to break down those walls or those silos that can sometimes exist within the smaller institutions as well.
That's a good point. So when I think about, when I saw the questionnaire, I started thinking about silos, and one of the benefits after seeing dozens and dozens of implementations that are mainly bank controlled projects, you start to realize that silos are self-imposed, right? And so even looking back towards the genesis of fintechs exist because core vendors just didn't move fast enough, right? I mean, bottom line. So it isn't a technology problem. It's a speed to change. When I saw the initial questionnaire and I started thinking about silos, I think about in a lot of ways silos are self-imposed, right? So the genesis of fintech is really rooted in a community financial institution's overdependency on a core vendor that maybe doesn't move fast enough. It's not a bad thing, right? So they should be stable and slow moving in many ways. The problem over an extended period of time is that becomes the norm, right? And so if your entire worldview is, in other words, a community financial institution's product roadmap is completely reduced to the core vendor's roadmap, which means they can't look beyond that, right? And so that is, for example, a self-imposed silo. And so I think that, if you're going to break past the silos, you need to start looking outside of your comfort zone, right? Maybe the people that you've been working with have your best interest in mind, obviously, because stability is an important thing. But if you're looking for innovation and rapid movement towards growth, maybe you should think otherwise, right? In the same way that if I want to lose 10, 15 pounds, I'm not going to ask my overweight aunt, for advice on what to eat and what not to eat. It's pretty straightforward. And I think, it boils down to returning to very simple principles, right? If you continue to do the same thing over and over again, what are you going to get, right? And so to break through and to bust out of those silos, I think it's important that you actually step outside of the silo to look at the world in a different way.
I 100% agree. And it's, what do they say? Growth happens outside of your comfort zone, right? So another
Was
thing
that bad to use my aunt?
Sorry. No, that's hilarious. I
think it's great. I think everyone thinks of that, right? Everyone's about that.
And everybody wants it. Everybody can relate to it. Like, I want to lose weight, and everybody has a way for you to do it. And then you're like, but why aren't you doing it? Why is it working for you? No, I think it was fine. But another thing I wanted to mention, and just do a little plug here too, so if we can just pick back up, you had mentioned waiting on the core, waiting on their roadmap to catch up. So for those who are interested in that conversation, we're actually going to have another podcast in FinTech Shark Week that we're covering just that. One of the things I really wanted to pivot into is Stripe's recent stablecoin play. And so we'll frame it kind of as this case study and what happens when you wait, right? So these stablecoins accounts aren't a far off future. They're present day reality, offering real-time global financial services. And so this move directly targets business customers right in the wheelhouse of many mid-market FIs, as I was saying earlier. And the deposits, which everybody's vying for and fighting for right now, it's losing that relevance in the broader payments ecosystem. So some questions for you guys. How do you think the announcement around Stripe's change, how's that going to change the landscape for specifically mid-market FIs that have traditionally served these small businesses, mid-sized businesses?
Great question. I think, from a bank's perspective, there's multiple angles to look at this from. First and foremost, what does this really mean in terms of impact to the bank? Especially what if we do nothing? Like what if the bank does not evolve or iterate here? That's the first question. You think about many financial institutions today serving cross-border payments using traditional methods. There's non-interest income that's coming from that. Those relationships are business customers. Many of them are holding account balances at the bank as well, so they're holding deposits. So there's a deposit opportunity there as well that could be potentially threatened as well. We look at Stripe and what Stripe has evolved over the years. This is something we've seen going back to the early days of merchant acquiring and payment gateway online transactions. We saw Stripe come along and really look at the areas of friction that were happening in traditional card acquiring online, traditional payment gateway, merchant setting up a merchant account, complicated pricing scenarios, complicated underwriting processes, kind of old-fashioned APIs. So Stripe, looked at all the friction that happened there, and they came out with a developer-centric approach. They looked at building a modern API to attract the developers because they knew the developers were really instrumental to get e-commerce to continue to grow. Built out a risk analysis in terms of the ability to quickly underwrite a merchant online, making it very much more, compared to the other options, frictionless to traditional methods. And they simplified pricing. So they made it more straightforward and more simple. And that grew their adoption, which, we look at Stripe very much like a disruptive innovator, right? They came along, saw friction, they built systems and tools to reduce that friction, and it's been successful for them. So we've seen them, iterating this over the years. Now we give Stripe a lot of credit for what they've been able to achieve, but they are not the only player in the world of payments today. They've been able to disrupt and make a significant impact there. But other payment providers have been able to iterate, have built better systems for onboarding merchants, have enhanced their APIs, have modernized more of their technical stack as well. So it's driven more innovation into the industry. I see some similarities now happening with banking. Banks looking at what is their future strategy in terms of how are they going to now interact with banking powered by Stripe and these new platforms and stablecoin. There's an opportunity to learn. Many times we see in our conversations with banks that are considering expanding their policy to do some sort of activity in crypto, many times they're concerned that they need to jump in and become a custodian of crypto right away, but that's not always the case. There are incremental steps that can occur there. So certainly we see this as one, certainly the biggest threat is the bank does nothing. Two, there's opportunity for growth with the right practical approach to it. Following it, banks are best at creating trust, serving local communities, building on relationships, and that's the strong differentiators that banks bring to the table. Whereas Stripe is, great. It's a powerful, robotic experience. It's got a lot of power behind it, but it loses its relationship and trust equity many times that banks can bring to the table, along with a very found a strong foundation of compliance and regulatory frameworks that are really foundational required in fintech relationships. So we see it as a threat, but at the same time, a big opportunity.
I'll echo that. I mean, I think, Stripe's move towards, this has been, writing has been on the wall for some time now. And I think it's going to result in one of two things, right? One, massive confusion, and which is going to exacerbate the fear. or two, it's going to, motivate smaller institutions to look at the opportunity, because it doesn't matter, how innovative blockchain becomes or how innovative, crypto becomes. Ultimately, we live in a central banking system, right? Where everything must eventually on and off ramp. That, if a small institution, mid-sized institution sees itself as that gateway, to the Fed and to the card networks, that it can actually provide, foundational infrastructure to players like Stripe, right? And so it really is about like understanding like what it is that an institution brings to the table, right? You have a charter. In many cases, you've been there for 50, 60, 70, 100 years, and you've been around much longer than, 99.9% of every single fintech on the planet, right? And so you have something meaningful and lasting there, right? And so when I look out and I see all these crypto plays, it gets me excited, right? Partly frustrated because I want to go up there and say, you can do more. But it is an exciting time. It gives institutions an opportunity to provide that foundational infrastructure, and it's not the end of the world. It will be the end of the world if you do nothing, like Daryn mentioned.
Because this is really what it is. I mean, we come in, we meet with the bank executives, we talk about where they're at right now, we learn about where they want to grow in the next 3 years, and we help essentially shape their deposit growth and their fee income growth, and then we build out a fintech management policy, and a lot of times that includes building out a fintech crypto initiative. One of the program structures is a crypto initiative, and we typically start off with banking licensed exchanges for fiat on and off ramp and custody, which is all ledgered on Braid, but that's like the starting point. But then naturally we're seeing, and this will be really fun conversations after stablecoin, because I work closely with many of the custodian platforms like Fireblocks, et cetera, that actually work with banks that actually do the custody side of it. And that could be like a series of conversations that we bring into as well. So
you just inspired a thought. So I was thinking about, as we're talking about stablecoin and all that, there's something powerful about just accepting what you are and what you're not, right? And I think where institutions will fail, and we see it all the time, where they want to become a Stripe or they want to become, right? So there's an overreach. And so in that drunken state of trying to accumulate like as much technology as possible, in many cases, they just select the wrong technology, or they create another, over-dependent scenario, right? Because it's just they buy on, based on, again, rooted in something that they are not, right? And I think once an institution starts to realize that, hey, that good old-fashioned fixed width file that connects to the Fed, and that good old-fashioned Fedwire file, like these things have stood the test of time, right? And sure, it's going to evolve, and FedNow is going to come out. There's going to be all this innovation around Fed-level payments, but there's a huge, opportunity around building decent business, around that sort of infrastructure to industry players like Stripe, and beyond.
One thing I was going to say is I'd love just kind of like this free form conversation we can have, because the thought, and I think the point to emphasize here is that what Stripe has done in partnership with others is not limited to Stripe's capabilities. The banks can actually do this too. They can participate in this. Stripe has just happened to be the leading edge on this, right? They've put out the investment, they've made it happen, so they're that disruptive innovator. But that doesn't mean that banks are not able to do the same sort of thing. The infrastructure is there, right? It's just a matter of understanding it and building a proper framework to do it. So Stripe has no special privileges or licensing to do this. The banks can do this as well.
Well, then I would question, because I agree, but what do you think is holding these institutions back from playing at that level?
Man, oh man, don't get me started. So this is why I get so excited about this one, because there's a moment in time when the banks that we work with, or credit unions that we work with, sort of they go through this like incremental demystification process, right? Where, oh my gosh, we can do it. Oh my gosh, we can do it. But wait, let me show you. Wait, let me show you. And you go through this process, and at the end of that, they sit there and go, wait a minute, we're already doing this, right?
Yeah.
So they're already doing it. They're already doing it. And so I say this a lot, and Daryn hears me talk about this over and over again. This sort of soundbite is you're closer than you think, right?
Yeah.
You are absolutely closer than you think. And I don't even know where I was going with this talk, but it got me excited and it's fun to talk about.
Yeah, I mean, it's that idea of that this is not, banks are not excluded from this opportunity. They can participate in it, right? And it's a decision within the bank to do that and take the practical steps to understand it and to do that.
Yeah, it's when you get into the back rooms, right? The ACH or wire operations room, and you sort of talk to those folks, you quickly realize like how far the gap is in terms of understanding. Meaning, if I go to a venture-backed startup, right, and I get into a room with the most savvy product managers and savvy developers, and then you compare that to having a conversation with an ACH operator or a FedWire operator, the bank operations team will feel like the Jedis, right? Like the gurus, right? It's very powerful. It's a very powerful thing. And when you sort of help them understand like what APIs mean in reality, right? And eliminate all the marketing jargon. But if you strip all that away, there's a sense of pride. There's a sense of ownership,
No, I think that was great. And one of the things, I would ask you kind of leading into this next question, though, is how do they use their size to their advantage rather than a limitation? And so you had just mentioned, your operation folks. And a lot of times at financial institutions, these mid-market, you have someone who does so many different things, right? And they almost could see this holistically, right? So for you to come in and be like, you're so much closer than you think, mirror this process over here, look at what you're doing here, right? They're going to get it, and they're going to get it right away. And it's really funny that you just mentioned Jedi, because we just did a podcast on are you the hero or are you the guy, right? So kind of, the niches, the braids, the Daryn and the Role FinTech Partners are kind of the guys kind of leading you. And then, the heroes are really the folks on the ground kind of doing the 100%. Work. So how would you say they kind of turn their size into that advantage as opposed to limiting themselves?
Daryn, I think, you should start this one, because Daryn's role is about awakening that side of the institution before someone like Braid can come in.
Yeah. Thanks for that, Elyssa. And I love this. There's so many reasons why we do this and what we get excited about in our work with the banks. And so much of this is we think about the legacy and the history of these banks. Many of the banks we work with are 100-year-old banks. They have a story and a history, right? They've served the community, and there's a reason why they've been able to weather the changes of what we've seen over the decades, really. And we're at another intersection of that today. What we love to have conversations with the banks about are what are their missions? What drives the culture within the organization? And what does the next 100 years look like? We love to present an approach to how the next 100 years can be the best 100 years. And many times that's driven by innovation, by adapting and harnessing the change and putting this opportunity into the strategy within the bank. So this really leads into much of our approach with the banks as we look at where the bank is at today. What are they looking to grow over the next several years? We look generally at a 3-year approach. What is the bank today, and what are they looking to do in terms of growth on deposits? What is their growth there forecasted? How are they doing it? What are their estimates in terms of growing the bank's non-interest income? What sort of strategies do they have there? This is where it gets really fun, because we now bring in, essentially through very collaborative work with all departments within the bank. We work with the executive team to outline the vision. We work with all of the departments to then get them involved, to get their input and outline essentially a 3-year strategic plan, which many times that develops into an expanded fintech policy, process, and procedure. And along with that comes deposit growth, fee income growth. We then create program types. We then identify specific industries. Digital assets and cryptocurrencies just happens to be one of them that we see significant opportunity in, which then drives the growth. And it involves a collective effort throughout the entire bank organization, from the executive team to the board to every level within the bank. They're involved. And what we celebrate are the successes of this. And Randy and I high five ourselves virtually sometimes, when we hear stories about the bank growing. They're adding new headcount to the bank. bonuses, there's rewards that are coming as a result of this. And that's really exciting to see a bank that at one point was potentially looking at their flatline growth to now seeing success happen, and to create kind of a vision, a strategy for the next iteration or next generation of payments. And on the other side of the equation with our fintech relationships, they're looking for well-equipped, trusted bank relationships. They're not necessarily looking to go to the big banks and be another number in a long line. They want to have a close working strategic relationship with the bank. So it's a good model match to bring the fintechs together with the right banks and vice versa, help the bank meet their growth targets through deposit and other fee income growth, and all wrapped around a nice safety blanket of compliance and regulatory alignment and technology. Frankly, and I'll talk a little bit about Braid's unique position here, the ability to modernize a bank's API, how the bank interacts with these fintechs. We see, not by what we are hoping to see, but by, in reality, fintechs lining up, banks lining up that have integrated to Braid, and now they're looking to find their next bank partner. So we see a lot of growth potential on the fintech side, banks that are participating, and we're happy to be the orchestrators of that and connect the dots. So it's a unique opportunity, and fundamentally it gets down to the result. That's what's exciting about this, is we see the growth happen and we see the bank, have a new kind of light of hope or excitement to do something new or different and to continue the legacy, serving the community. And that's what we're passionate about.
Yeah, it's good stuff. I think, on our last conversation, Elyssa, what did I say? Something like, something pretty cheesy, like, all big things start out small. Like that was like, that thing sticks in my head, right? Because, imagine, think about it this way. A small group of people will raise, from a startup perspective, raise a couple $1,000,000 to go build a fintech, right? Small team, 3, 4, 5 people, and have to go hunt for a bank partner, right? And maybe they get one, maybe they don't, right? And so, 2, 3 years in, they're still trying to get this off the ground. On the flip side of that, you have a small institution, right? So same sort of team composition when compared to a startup, right? You've got the CEO, you have the executive team, you have the product folks. The only difference is they have a charter, right? Big difference, right? And it's so obvious that sometimes it sounds ridiculous talking about it, but it's so overlooked. And I think this has to do with leadership, right? I mean, when we sit down with bank CEOs, there is an unrest, right? There is an unrest. Like I see all this activity happening. We don't have enough team members. We don't have the right technology. We don't, right? And, we rub our hands together and we're like, this sounds like the perfect startup environment to me, right? Because that's what we do. We build startups for many years. And so I think from a financial institution perspective, you have to start somewhere. And if you have to start small, you should start small and grow from that. But it really does depend on leadership and somehow finding that motivation. The motivation can be fear or it can be excitement. Either one, pick your poison, right? But the size of the institution should not be the negating factor. Because right now we're working with, institutions that on paper maybe should not be doing this just because they're small, right? And we're starting to see them, $10 million, $100 million in volume, right? This is where it starts to get really exciting. And it just starts from that leadership, sort of shift.
Just at least get into the conversation, right? Do some discovery, see what's out there and what makes sense for you guys. If someone was listening in today and wants to take action, what would you say that first low risk step is that they could take to start kind of breaking down those internal and external silos? And it sounds like, I just asked you a question and now I'm continuing to talk, but it kind of sounds like from the top to right through to your operations teams to the people who are going to be on the ground, like everybody needs, a seat at the table and to start kind of getting into these conversations. But
yeah, sorry, do you want to go, Randy? I've got a thought.
I had a thought. So, I think the first thing I would do is I would not look outward, right? So the tendency is what don't we have, right? That's usually when we're talking to banks. But I dare say that if you sat down with your team and you talked about, the landscape, like things are happening, we have to change, or we will be left behind. I bet you anything there's going to be some excitement around, new opportunities and like taking inventory of everything you have, right? Staff, expertise, even interest, right? Because I'm sure, we see this all the time. Like someone in the back office operations room maybe is already like taking a course on Coursera about stablecoin. Nobody knows that, right? And so if you did a little bit of digging, I bet you would find, someone in your team that is already thinking about that. So the question now becomes, how do you inspire more of that, more of those discussions? How do you create a culture that embraces risk taking, at least from a thought process perspective, right? You don't have to go out and, spend $1 million on technology, but you can certainly have sessions with your team to talk about, hey, this is what we have. What can we do? So, I point back to sort of the culture and the leadership portion a lot, because in the course of my career, I've probably seen 20 or so payment systems implementations from the ground up, like paper napkin to launch. And majority of the time, whether the project succeeds or fails is always going to be rooted in the leadership, right? And so bank already has the charter, bank already has the keys to the kingdom. That's done, right? Biggest portion, biggest problem solved, right? Now it's, does the leadership team have the stomach really, right, to level up?
Listen, and I love that you asked the question, because this is exactly where we see, the conversation typically start with the banks. Is we come in and we look at what the bank is already doing today. So to Randy's point, they may be closer than they realize. What we see is that with many of the banks that we partner with that are looking to develop or establish or expand a fintech program, they're doing something today. In many cases, they could be a merchant acquirer looking to expand into card issuing, or they could be serving some specialty regulatory requirement market as well. And so they've built some specialty programs. And so our approach is maintaining that comfort zone. Yeah, the magic happens outside the comfort zone, but at the same time, we start inside of a zone of comfort to identify a workable opportunity that's not too far outside of what the bank is doing today. So we don't want to come in and start with something we know is going to be outside of what the bank is capable of doing. So finding something that's a close, common sense approach to starting in an area where we may be able to expand a treasury account. We come in, we identify a particular channel, and we begin to build that channel to grow deposits just on a treasury side. Start with that then drives benefit to the bank. They're now growing lower cost deposits at the bank. They're seeing the benefits from it. So we're very much focused around the meritocracy of it, the merits of the program and how it's growing. And once we see success there, then that allows the lens to kind of zoom out a little bit more, and we take a bigger look. We then introduce additional capabilities with Braid, et cetera, that now open up new avenues of opportunity. But the bank is benefiting from it because they've been able to start with something, as a smaller step, build the success there, and then success builds on top of success. You build a little bit further, you add additional resources to take on additional program types, which then opens more opportunities, that opens more deposit opportunities. We then start to see more activity on the transaction side happening. Non-interest income begins to come in. We see those benefits diversify the benefits across the bank. And then you kind of build it into this overall thesis of growing and setting 3-year targets. So starting with something that is a comfortable starting point, and then expanding and growing from there step by step, and always working very closely with the executive team and the board team and communicating with the regulators, everything. So it's about community of trust and comfort, and building out something that follows a very common sense approach to growing. What we see, in terms of this is the banks, they then continue to develop their strategies off of that. They then, the lens of opportunity then begins to open up from there, and we see, continued growth from there.
If you guys have any final thoughts for the listeners today.
Yeah, I think like times are changing quickly, right? The market is shifting, And there's a magical moment right now in front of, mid-sized institutions. Like they have the ability, the resources are there, the technology's there, the opportunity is there, customers are there. The question really becomes, are institutions really willing to make that leap to change and to take advantage of that? And, whether it's Braid, whether it's Role, it doesn't really matter, right? From the beginning, when we started this thing, Daryn and I started talking about this back in 2017-ish, 16-ish, about sort of returning this kind of power to institutions, because we saw the writing on the wall. We're like, wait a minute, should we even exist, right, as fintech players? Because if technology becomes more affordable over time, it just sort of makes sense, because these are all just banking functions, right? And if we just thought about, okay, what if we just flipped the script and said, okay, we're going to serve banks as opposed to extracting value from them from a traditional fintech perspective, then what does the world look like then, right? And so I think now it's a great opportunity, and whether it's Braid or Role or anybody else, just do something, right?
Yeah, thanks for that, Randy and Elyssa. Yeah, just in closing thoughts, just looking at, kind of going back to what we started with, just looking at the opportunity at hand, from a risk perspective, just like with anything else a bank looks at. If we do nothing, then, we potentially could be left behind with this, this changing innovation. There's opportunities, breaking down the silos that we talked about. There's advantages in the nimbleness and the community trust and engagement that the regional and community banks serve in those markets. The playing field is now more level than ever with platforms that are coming to market like Braid, building out policy, process, procedures, building out a very, strategically aligned and board-approved fintech management policy. Build that out into your playbook. Build out a fintech strategy to grow and continue to grow. Because the innovation is here. We'll continue to see the innovation happening. If you think about your bank, you're likely a bank that's been around serving the community for a long time. And there's a reason for that. And what we think is exciting is to continue to iterate and evolve and to grow and to continue to serve your communities and expand that scope. Make the next generation, make the next chapter of the bank just as exciting as the chapters which precede this and have brought the bank through varying changes that we've seen over the years as well. So excited to be part of this conversation today, and thank you again, Elyssa, for this opportunity. And Randy, as always, we're passionate about this, and thanks again for the opportunity to be here today.
Make banks great again.
So for everybody listening, you heard it here. The payments landscape isn't waiting for anybody to catch up. For financial institutions serving your community, it can feel overwhelming. But the thing is, you've always played this critical role in your community and the broader financial ecosystem. You're closer to your customers. You're more agile than you think. And you have this real opportunity to kind of shape what comes next. So if you choose to lean in, you'll see some success out of that. Disruption is inevitable, but irrelevance isn't. The fight isn't over, right, Randy? It's just getting started, and together we're more than capable to kind of meet this moment head on. I will say that's a wrap for today's conversation. Huge thank you to Randy and Daryn for joining us and sharing their incredible insights. These are exactly the kind of conversations that we need to keep pushing the industry forward, breaking down silos, kind of exploring what true collaboration looks like, and then helping those mid-market financial institutions realize the power that they really do have to lead through all of this change. If you're listening and feeling inspired or maybe even a little challenged, that's the point. Stay connected, stay engaged, and don't hesitate to reach out if you're looking for ways to join the conversation. Together, we can navigate this changing landscape and shape what's next for the future of payments. So take care, everybody. Thanks so much.
Thank you.
Thank you.
On behalf of Niche, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of niche.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.